That's right. We're looking at what The Rock is cooking today. It's going to be Campbell's soup. It's going to be some chicken noodle soup because you're a little bit of a baby and you're going to eat some chicken noodle soup. Okay? Hear me out. Stock's down 4% today. They reported earnings today, and we're going to look at those earnings. One that you can potentially understand why it's down. You think about, again, the Rona stock. This is such a consistent stock, down, that's right, or really up 2% on the year, which is crazy. When it's been an outperformer since their downturn, around 20% up, it's a stock that really should benefit, all things considered. If you look 5 years out, things still not doing too wonderful, right? So this is just a very basic consumer staples stock that obviously just doesn't show much growth, right? It's a soup company. You don't expect much annualized growth. So I anticipated on this one, I anticipated a revenue beat, or a very good revenue number, and an EPS miss. And guess what? From a non-GAAP perspective, 83 cents beat by 6 cents, and a GAAP EPS of 55 cents beat by 21 cents. So that EPS miss was certainly accurate. It was a little bit worse of a miss than I expected. That 21 cent miss is not a beautiful one, I'll tell you that. I expected a little bit better than that. But the revenue number, they'll show a miss on here, but still they posted a $2.2 billion number, which was up nearly 15% year over year. And if you think about a soup company, 15% growth is astonishing. Typically, they tend to post around a 2% growth, potentially year over year. And that's really, if they're posting growth, it's going to be 2%. They're such a consistent company. You see a miss, but again, it's because they raised their estimates pretty high. And this was all just risen guidance, and that's why you see a miss here. But still, very good revenue number on that perspective. And it's, stock fell from when it earlier reported. Organic sales grew 17% in the quarter, with meals and beverage segment seeing a growth of 21% as demand for at-home food soared. Gross margin was 34.7% of sales during the quarter versus 34.1% consensus. Operating margin was 17.2% versus the 15.9% consensus. So better than expected here. That's all I can say. As far as the guidance is concerned, they see full year revenue of a positive 5.5 to 6.5 versus the prior guidance of, that's right, as I mentioned, negative 1 to 1% growth. I told you this is a company that doesn't post growth because what's the driver for soup? There's not a driver. It's just a consistent, people will buy it, but it's not like people are going to buy it more than ever out of nowhere, except for when there's Corona. EPS of 287 to 292 versus a prior year of 255 to 260 and a 289 consensus, so right in line with the consensus. So they're not seeing much of an impact totally. Full year is what they're expecting as far as that EPS is concerned. So interesting to look at that. So I'll be very interested. We'll look at this earnings slides and take a look at this. Can the stock sustain where it's at? And, I mean, in my opinion, before we get into the slides here, I don't know if there's much upward momentum that's going to carry this stock higher. And there's definitely a couple reasons for that, just due to the fact that, well, what's driving this long term? This is a stock that you're going to see benefit currently, I will say that. At the moment, you'll definitely see an absolute benefit just, with the fact that they're getting more demand. People can't shop at restaurants. People can't eat at restaurants, so they're buying a lot of stuff for home. Now, once everything starts to open up, and it already is, so even next quarter, right now, we're talking about this quarter, Q4 for them, again, you'll see a positive growth because part of this quarter is going to be impacted by it. But then following this, starting the fiscal year of next year, what in the world is going to be driving that growth? You know what I mean? What is going to be driving that growth once everyone's open for business and home cooking isn't quite as important? I don't know. I don't know what it is, and I think they're going to fall right back into the revenue trap or the growth failure of, right around break even every single year. I really do think that that's what they're going to end up going to. So this stock isn't one you look at for growth and share, you don't look for it in share price growth. Right now hosting a dividend yield of 2.8. That's why you like the stock. It's a consistent one that doesn't fluctuate that much but pays a dividend, and they will consistently pay a dividend. So that's why you get into stocks like these. I don't see much share growth going on here. Hello, Rebecca Gardy. She's the Vice President of Investor Relations. That's right, they make kettle chips. That's right, they make V8 gross, disgusting garbage. That's right, they make goldfish, and they make, obviously, soup. In case you were curious, I don't know why they had to do it in such a pastel design here. I can't explain that. Real food comes from heroes. I just wanted you to know that. Why is this guy in the middle here? Don't know if you see in the top left. The guy in the middle is freaking... Dude's massive. That dude's yoked out of his mind. He's been taking some roids. There's no doubt about freaking that. Again, I don't care much about the mission. Everyone's mission and response is the exact same. Heavy sanitation, taking care of both the customers and your employees. Come on now. 70% organic sales growth. Love it. 29% in-market consumption. And that is often... well, I don't know. Adjusted gross margin up 100 basis points. Adjusted EBIT up 31%, and adjusted EPS up 57% year over year. Good stuff. So millions of new households started getting or purchasing Campbell's products. Naturally, if you think about the fact that they had to, as part of just a big impact. Not only are we talking about hoard buying, people buying excess of what they need and storing it for later because the soup doesn't go bad, right? We talk about 3-year minimum shelf life on most of these things. Younger households representing a significant incremental growth. The younger households always are the ones that typically eat out a lot, so they ended up getting a little bit more of a little bit of a soup kick. I was about to say a different word, and I ended up saying kick. But they had to eat soup because guess what? It's cheap, and you can make it at home easy. Young people like easy food to make. They don't like making big dishes, okay? Increased marketing investments to retain these new buyers. They want to keep the people buying right now to continue buying in the future. Net sales, you see massive guidance growth here. They were only expecting really a flat quarter to now 5.5% to 6.5%. Very exciting. Adjusted EBIT, they're expecting 12 to 14% growth. That's pretty exciting. My leg was pretty itchy there, I gotta be honest with you. So obviously they're talking about the benefits of this portfolio. Talk about quick scratch cooking. You can make this soup with anything. You can do any Campbell's product with anything. Put goldfish anywhere. Whatever you want to do. Accelerated online buying, including home delivery and click and collect. The evolution of the retail shelf. Okay. And they're continued focused on value, offering shareholders just value for this, okay? From the meals and beverage perspective, which you see all the brands down here. Pace Salsa, Prego, that's right, the pregnant sauce. SpaghettiOs, that's a Campbell's product. You know it is. I haven't had that since I was 2 years old. Yes, whatever that kid thing is. They got chicken broths, V8s, all this nonsense, right? They showed a 21% organic growth. Operating earnings up 35%. Consumption growth up 39%. So people are getting a lot more of these products, as I mentioned. Pretty exciting, but marketing expenses did increase. They're really trying to go after people, and that's why you saw an EPS decrease this quarter, by the way. Accelerating our soup strategy. That just seems like look at how photoshopped that picture is on the right there with the spoon in the soup. That's like maybe the worst picture I've seen in my life. Come on now. Clearly that spoon is not in the soup. It's all photoshopped on there. Prior foundational work has been critical. They've made quality improvements on iconic brand varieties. Design is definitely a thing. Increased household penetration. And high repeat rate sales were up 35% behind condensed, ready to serve, and broth, including Pacific. So people are buying a lot of chicken broth because they're doing a lot of cooking, obviously. A lot of soups because they're doing a lot of cooking. Duh. Pretty obvious stuff here. So they're gaining new soup households. Can you believe it? The largest growth was the millennials. That's right. These people that don't cook ever are forced to make their own food at home because the restaurants were shut down. So they're working on improving customer relations as well. From the meals segment, which they're going to talk about Prego. Prego maintained the number one share position in the Italian sauce category. I find that slightly racist to call them that, but I would just call them sauces. Okay, that's a little bit racist. Prego consumption was up more than 50%. That is pretty good. I gotta say that. People consuming a lot of sauce. We're gonna have a lot of fat people coming up. I'll tell you that. Consumer turned to familiar favorites like paste, V8, and SpaghettiOs. I don't know. Don't know what to say. I don't like paste personally. I choose a different salsa in my perspective. Canada performed well, led by Pacific. Okay. From the snacks brand, some Schneiders, some toasted chips, Cape Cod chips, pretzels, kettle cooks, crisps. They got all this stuff. They make the Milano cookies. That's right, Campbell's owns these Milano cookies that the dark chocolate inside of it tastes kind of wrong, but it's also good at the same time. Their snacks organic sales are up 12%. Operating earnings up 19%, consumption growth 19%, and marketing expenses up 11%. Snacking brands up 5.4 percentage points of household penetration, increased along all the 9 power brands. That's right, all these grew. Everyone's buying more of these snacks because, again, there's going to be more fat people. I just told you this right now. Food consumption is higher right now because of the fact that fat people, this is rude to say, people are going to get fat in America. That's all I'm going to tell you right now. People in America are going to get fat because when they're stuck at home with nothing to do, they eat. And trust me, it's tempting. I mean, what else do you do when you're bored out of your mind? You eat. So, sorry, weight gain is going to be happening, guys. 7 of the 9 power brands grew or held share. Good for them. For snacks innovation, they launched the Snyder's Rounds, Goldfish Veggie, which makes me want to vomit. The twisted pretzel sticks from Snyder's are pretty okay. I will say that. They're pretty okay. And they launched in time for Memorial Day these first virtual products, Farmhouse Buns. Cool for them. Well, I mean, what can I say? That's really all, like, as far as the brand's concerned, that's all I really would want to cover. Do you think they include the, what am I looking for here? Come on, you know I want to find it. No, they didn't. We're looking for the balance sheet, baby. We're looking for the balance sheet, baby. We're looking for the balance sheet, baby. You know what? Sometimes it's impossible to find it, and I don't know why, because my brain is... Oh, there it is, baby. We're scrolling down. We're scrolling down. And we're going to find it. We're going to find it right freaking now. So, current assets, we're here. Current assets of $2.7 billion versus $1.4 billion of a year ago. Pretty nice. Total assets in general of 12.7 versus 13.7 of a year ago. So they did see a decrease in total assets in general. Something interesting there. Not too scary though. But you also see from a liabilities perspective, 12.7 billion right now versus 13.7 billion. So they paid off a little bit of debt. Pretty nice. So total overall, gosh, that's kind of weird to think about. But I don't know. Is that weird to anyone else? Maybe I'm insane. Wait, what am I? Oh, I goofed it. Overall total Shareholder equity, which their total debt number is what they're going to give it. Total equity of $2.5 billion. Not that exciting. Gotta be honest with you. If you include your liabilities together here, they're doing a weird balance sheet. I'll tell you what. But total equity of $2.5 billion versus $1.2 billion as of a year ago. So overall, a better balance sheet, improved balance sheet. Company that can still consistently pay the dividend, in my opinion. So I'm pretty excited about it. But that's Campbell Soup for you.